Hello friends, how are you? Have a nice day to you all. Today I am going to discuss about voucher entry of sales. In my previous video, already I have discussed about voucher entry of a purchase, different type of a purchase. I have already previously discussed. Now I am going to discuss about different type of a voucher entry about sales only. Agency sold product cost 2,50,000 to Utkal agency by cash. As per this question, Neit agency sold product to Utkal agency by cash 2,50,000 and received cash directly. So according to this question, what are the ledgers we have to create? There must be the need of one sale ledger under sales account and cash ledger which is by default. And the voucher type must be received voucher, because as per this question there is cash account must be debit and sale account must be credit. Why cash account becomes debit? As per the rule of real account, the cash is coming to the cash account by selling the product directly. So that is why cash account becomes debit 2,50,000, and due to the sale of the product the company is receiving cash, so that is why the sale account becomes a credit. So for this transaction we have to use receipt voucher using the button F6. The next question is, Neit agency sold a product cost 3,50,000 to Utkal agency on credit. In my previous question I discussed about cash sale, but this is the question of a credit sale. 3,50,000 is the amount that Utkal agency has to pay in future, and Neit agency sold this much product to Utkal agency. So for this question, what are the ledgers required? There are two ledgers must be required. One is sale ledger that we have to create under sale account, and Utkal agency account under sundry debtor. Why Utkal agency account group becomes a sundry debtor? The party to whom we sell product on credit, the person to whom we sell product on credit, the organization to whom we sell product on credit, if we create a ledger by that name, the group must be sundry debtor, and the voucher is by Utkal agency becomes a debit 3,50,000 and a sale account becomes a credit 3,50,000, because 3,50,000 is the amount directly Neitcomputer sold to Utkal agency on credit without getting any cash or without getting any check, without receiving any cash or without receiving any check. Credit on this is the credit sale that we call as credit sale. So Utkal agency, as it has not paid amount, so that is why Utkal agency becomes a debit 3,50,000, and due to the sale point of view the sale account becomes credit, that is 3,50,000. In this case there is the use of a journal voucher F7. You can say why there is the use of a journal voucher. I told you in my previous video, if during the transaction if there is no cash or bank used, जदि ट्रांजैक्शन ने बैंक किंबा कैश यूज होउनी, ताहले there is no question of a payment voucher, there is no question of a receipt voucher, there is no question of a contra voucher. There must be the use of a F7 or journal voucher. Journal voucher is the voucher called as adjustment voucher that we have to use in this case. The next question is, Neit agency sold a product cost of 3,50,000 to Utkal agency and Neit received cash at 2 lakhs. and remaining on credit. Neitcomputer, whenever it sold product to Utkal agency paid 2 lakhs by cash to Neit and remaining 1.50 lakhs, 1,50,000, it was remaining credit that Utkal agency will pay later to Neit agency. So for this case, what are the ledgers do we need? हमको कौन ledger दरकार पड़िबो? There must be the use of a sale ledger under sales account. There must be the use of Utkal agency ledger under Sunday debtor and cash ledger, which is by default it is created. As per this question, we have to do voucher entry, that is cash account becomes a debit 2 lakhs, Utkal agency becomes a debit 1,50,000 and sale accounts becomes credit 3,50,000. Now the point is, why cash account becomes a debit 2 lakhs? Because Utkal agency directly paid to Neitcomputer 2 lakhs by cash. So cash is coming to Neitcomputer's cash account. So that is why cash account becomes a debit. And Utkal agency becomes a debit because Utkal agency has not paid 1,50,000 to Neit agency till. So that is why Utkal agency becomes a debit 1,50,000 and due to the point of a sale account becomes a credit 3,50,000. The next question is, Neit agency sold product cost 3,50,000 to Utkal agency and received cash 2 lakhs and received cash 50,000 by check and remaining on credit. This is one extra question is added here. Neit agency sold product to Utkal agency, but Utkal agency paid 2 lakhs. Utkal agency paid 2 lakhs to Neit by cash and Utkal agency paid 50,000 to Neit by check and remaining 1 lakh it was credit. So that is why there is the point of a cash sale, there is the point of a check payment sale, check receipt sale, and there is the point of a remaining credit sale. So for this question, what are the ledgers do we need? One must be sale ledger under sales account, Utkal agency account, Sunday debtor, cash account that is by default, and SBI account under bank account. These are the ledgers we have to need for this voucher entry. Let us check what is the voucher entry. By cash becomes a debit 2 lakhs, SBI becomes a debit 50,000, Utkal agency account becomes a debit 1 lakh. And as it is a point of a sale account becomes a credit 3,50,000. Now cash account becomes a debit 2 lakh. Because of the rule of a real account, what comes in? Cash account is the example of a real account. So as per the rule of a cash account, real account, what comes in becomes a debit. So that is why cash account becomes a debit 2 lakhs. And the same process we have to follow. SBI account becomes a debit 50,000 because we are getting the check of a 50,000. Neit organization getting the check of a 50,000. So Neit organization's SBI account becomes a debit. Neit organization's SBI account becomes a debit because 50,000 is coming to the bank account of a Neit organization. And Utkal agency, as it has not paid till, it is the credit sale. Utkal agency will pay in future 1 lakh. So that is why Utkal agency becomes a debit 1 lakh. When Utkal agency will pay, that time Utkal agency becomes a credit. But here Utkal agency has not paid till. So that is why Utkal agency becomes a debit. And at the point of a sale, the sale account becomes a credit 3,50,000. The next question, the owner of a Neit received the due amount from Utkal agency after 1 month, that is 1 lakh, by check of a PNB. That means Utkal agency has given a check of a Punjab National Bank to the owner of a Neit because as per my previous question, Neat owner of a Neat has to receive 1 lakh as his due amount from Utkal agency. So that is why Utkal agency paid not by cash but by the check of a PNB, Punjab National Bank ro gote check Utkal agency Neat organization no owner को provide कला. So due to that case, what we have to do? We have to take the help of, we have to use two ledgers, that is Neat SBI account under bank account and Utkal PNB account under bank account. Because there is a transaction of in between two banks. The check will coming from PNB. The check will coming from PNB and it will be given to SBI account of a Neat. So that is why there must be the two bank accounts, that is Neat SBI and Utkal PNB account. Then its voucher entry becomes Neat SBI account becomes a debit and Utkal PNB account becomes a credit 1 lakh. Because check is coming to Neat SBI account. So that is why Neat SBI account becomes a debit and cash will be deducted from Utkal PNB account. So that is why Utkal PNB account becomes a credit. This is the system of a transaction in between two banks. So previously I told you we have to use contra voucher. When we use contra voucher, when there is the use of a transaction in between cash and bank and bank and cash and cash and bank and bank. So this is the example of a transaction between bank and bank. So there must be the use of a voucher type F4, that is contra voucher. Then the last question is, the owner of a Neat agency received the due amount, that is 1 lakh from Utkal agency by cash. As per my previous question, what I discussed, by check, but here it is by cash. What is the meaning of by cash? Utkal agency by cash, it has paid Neat organization, Neat agency 1 lakh by cash. Cash आकार Neat owner of Neat organization को बा Neat agency रो owner को Utkal agency cash आकार payment कले 1 लाख टंका. In my previous question, by check Utkal agency paid by check, but according to this question, Utkal agency paid by cash. So for this case, what are the ledgers do you need? One, there must be cash ledger. It is a default ledger. We don't have to create it. And another is Utkal agency, that is Sunday debtor, because we have sold it. Neat organization already has sold it to this organization, that is Utkal agency. So that is why Utkal agency group must be Sunday debtor. And as per this question, Utkal agency, as it has a paid cash to Neat organization, so Neat organization's cash account becomes a debit and Utkal agency becomes a credit, that is 1 lakh. As a cash account becomes a debit, so that is why voucher type becomes F6 or receipt voucher. Cash account becomes a debit. Why? According to the golden rule of a real account, what comes in debit? Cash is the example of a real account, so that is why cash account becomes a debit and Utkal agency becomes a credit, because Utkal agency previously it has not paid, now it has paid, now it has already paid to Neat organization. ଯେତେବେଳେ ଉତ୍କଳ ଏଜେନ୍ସି ପେମେଣ୍ଟ କରିନଥିଲା ସେ ପର୍ଯ୍ୟନ୍ତ ଉତ୍କଳ ଏଜେନ୍ସି ନାଁରେ ଲକ୍ଷେ ଟଙ୍କା ଡେବିଟ୍ ହେଇକି ଥିଲା। ଯେତେବେଳେ ଉତ୍କଳ ଏଜେନ୍ସି ପେମେଣ୍ଟ କଲା ସେତେବେଳେ ଉତ୍କଳ ଏଜେନ୍ସି ଆକାଉଣ୍ଟଟା କ୍ରେଡିଟ୍ ହେଇଗଲା। ଉତ୍କଳ ଏଜେନ୍ସି ledger must be credit and our Neat organization's cash account becomes a debit.